All right, we're live. Thank you again for being part of us as this weekly episode, takes place. As a reminder for some of you, we started those office hours as a way to open our door. A lot of you asked when we started to get out of our stealth mode, who we are, what we do, and you were asking a lot of questions in the background on our WhatsApp channels, email channels, and so on. We said we'll open the door once a week and call those office hours, and sometimes inviting colleagues, partners, and friends like it is today. Thomas, I'm happy to have you here.
Thank you,
Hello.
Alec.
So,
Good evening to all who are participating at this call. Thanks
thank
for the
you.
invitation. Thank you.
No worries, Thomas. So before we proceed, as we want to kick off this, knowing you a little bit better, can you tell us a little bit more about you as an individual and potentially the activities that are connecting you to the VC landscape in Switzerland?
Yes, for sure. Thank you for the invitation. My name is Thomas Simon. I'm SECA. SECA is the Swiss Private Equity Corporate Finance Association. I'm the head of the venture capital chapter. So that SECA is standing for Swiss Private Equity and venture capital. And so we have, or at our organization, the main GPs are represented there. So it's not only the established one, we have more and more the emerging managers who are joining SECA. We are offering workshops, seminars, we are doing training sessions, VCs on stage where GPs can present themselves. So and we are inviting there also LPs to join the event. That's at SECA. Then at HBM Partners, I'm head operations, investment solutions. We are one of the leading globally active healthcare investor. So biotech, pharma, medtech, diagnostics, and with a focus on the US.
Thank you for that. And from a personal perspective, I met you there at SECA actually, and from someone who didn't worked all my life, in the financial world, right? Having SECA firstly from an external perspective, right, from your website, has a ton of good information there. So I will really encourage people that are curious about venture capital in Switzerland to have a look at your website because in English, French, or German, there is a bunch of good information there to help navigate the system. And second of all, I think if you are serious about getting there or even interested to build a network, SECA for me was one of the way to build my own personal network. So thank you for pushing, those events and those gathering all across Switzerland. It's really nice.
Yeah, and maybe we can add that I'm the co-author of the Swiss Venture Capital Report, where I will talk a little bit also later. And maybe you can also check there. You can find all the numbers about the financings, exits, fundraising numbers on the internet. And please check it out. Yeah.
Yeah, just to set the scene, Thomas. So our audience, just to give you an idea, is composed of startup founders, obviously, Swiss-based, European-based, North American-based. But we also have corporate VCs from regulated industry. Usually they come from pharma. I come from a pharmaceutical background, so I worked in the industry for years. And usually those corporate VC always eyes to the US for some reason, right? And more, thanks to the data also you guys gathers at SECA and from your personal perspective, I wanted to use this opportunity to have you on stage to talk about the Swiss VC ecosystem because too often we think European is slowing down. We heard like 2 years ago, just after COVID, it's not a good time to raise a fund. It's not a good time to raise funding as a startup in Europe. And despite that, there is this island called Switzerland in the middle of Europe that is there, right? And having its unique properties as a VC landscape. Can you tell us more about that? And if you want me to pull up maybe one slide from your latest report, we can kick off by having that slide in the background.
Yes, for sure. So that's a good point. So we can see here the volume-based market share of global venture capital, and it shifted dramatically when you can see that in 2004, around 20 years back, we had around 82% was invested in US, and all ex-US that's European, Asia, rest of the world, so-called, it was only 18%. And now when you see the numbers, 2021, you have a split. So it's half is coming from the US and half is coming from Europe and Asia. So it's a dramatic shift of importance. And in Switzerland, we are, when you look at the numbers, we are among the top 5, top 6 countries in Europe. So currently, or last year, we raised around 3 billion. Top we reached in the year before at 4 billion. So that's 1% market share overall. So we had global venture capital investments last year for around 300 billion. So we had 3 billion in Switzerland, so that's 1%. But that's, it seems a little bit not so much. But if you compare that to the US or the entire Europe, then it's a dramatic shift we can see. And in Switzerland, what makes us unique in Europe is that we have deep technology, we have a high talent pool, we have the top universities here. So and we have well-known, established corporates such as Novartis, Roche, ABB. So we have the largest one, or we have the domicile of the European headquarter here. In the canton of Zug, we have Siemens, we have Johnson & Johnson, we have Merck. So it's the ecosystem is gaining of import, or is gaining. We have more participants, and this also helps that the venture capital ecosystem is growing in importance. So there is more, how it is, corporates, and then you have as well the spin-offs from corporates, founders, entrepreneurs. We did see in a couple of last years a lot of exits. So in venture capital, that the proceeds will preferably invested into new ventures, into new startups, so or funds. And so that was the reason that we have seen last year around 50 new funds in fundraising. So that was one of the major observation we had in the last venture capital report. And it's clearly against the trend. So at the moment, most are talking about the decline in venture capital investments, but when it comes to fundraising, it's quite the opposite. So you know how it is. These funds will then not be invested in 1 year. It will be then invested in 3-5 years. It's year by year. And so we are quite optimistic that we will see new investments coming from new funds, from new managers. And what we also seeing here is that there are more and more entrepreneurial investors. So investors who founded the business before and now changed the role from entrepreneur to an investor. But that's a good development, because the entrepreneurs know how to do the business. They see both areas, and that's a good sign. And then last year, out of the 52 funds, already around 26 funds reached their first closing. So they are ready to invest, to deploy capital. And so that's a good sign for the Swiss or European ecosystem, despite the challenges we have at the moment with a little bit a lack of larger financing rounds.
And it is interesting. I know two things coming up from LPs this time, or potential investors that are interested in the Swiss ecosystem. It's the quality of the talent, the quality also of the type of companies, the technology-driven companies, the deep tech type of companies, or when it comes to healthcare, you said that there is a good ecosystem around corporations that also are driving good therapeutic areas, from Switzerland. I think there are two things that I can compare to the North American market or other ecosystem like the London-based ecosystem, is there is a lot of tech transfer between universities and schools to the private market. I think that clutch is well perceived in Switzerland compared to other markets where it might be too much of a lab feel. Here we have this entrepreneur roots, I feel. And you
Mhm.
said that there is a lot of business angels, a lot of former funders that see Switzerland as a good ground to reinvest and create a new generation of companies, right? So I think these two trends makes it quite a good foundation for creating a positive growth or positive trend and stay resilient. And also something maybe or maybe from your perspective, but I also saw a dynamic that where we have less entry in terms of the startups in an ecosystem, the better is the type of exit or the quality of the company that exits. And the opposite is when you have markets that are a little bit too open, where the quality of the selections of from the ecosystem is a little bit too broad. When for example cash is kind of floating and we just sponsor and sponsor, its quality of the exit are a little bit less positive. And here in Switzerland, I see that we do want to create global market leader by definition. The company cannot. Some of them stay in Switzerland,
Yeah.
obviously, and become Swiss market leader, but we have this route to become naturally connected to the world, and I think that makes it an interesting point for potential investors.
Yeah, absolutely. And yeah, our startups here in Switzerland, they have or tend to think globally from day one because the domestic market is small, and they urged to think about global solutions, products for the global market. So I think and that, as you said, the deep technology, the spin-offs from the ETH, from EPFL, for robotics, clean energy. We have a lot of examples where we are world-class leaders, and this helps to develop globally distributed products. And you also mentioned deep tech, business to business. So we are also, and that was also a trend we observed in the venture capital report. You can see it here. Last year it was a little bit more challenging, but before that, more and more we saw corporates who bought deep technology companies B2B. We are not so much involved in B2C, so we have more the corporates and also as investor and as buyers. And you can see it here from the chart that we have foreign investors, we have the Swiss-based corporates who are buying, or startups, even startups, bought other startups. So I think the consolidation trend is there, and you can see Switzerland is dependent from foreign buyers, from foreign investors. That's a challenge, but it's also an opportunity for both sides. And you can see last year it was a little bit more challenging because we had a little bit more risk aversion when it comes to international capital flows, etc. So it was a little bit some uncertainty around. But I think that the general trend seems optimistic, and we will see more M&As.
Oh, for sure, and I can give an example to that. We supported a startup from seed to Series A in the fintech space. They were in New York, right, based in the US, and they wanted to go global. And we recommended, obviously, that Geneva would be, from a fintech perspective, the best place to start a global position because it's going to help them attack the European market easier, and they are going to gain credibility to also go to Asia and Africa and that kind of growth routes. And they did. It did help them to gain credibility. They worked how to have the FINMA license, and from then on, having that credibility to expand, right? And I think this is a good model where people think always like, oh, we are getting good market leaders and foreign investor will take it away. Actually, sometimes it's the opposite, right? It's going to attract capital to further grow a community, because those fintech startups that we bring to Switzerland, even if they become global, will create an ecosystem around them, like providers of services and different layers of companies beneath them. I have a question from my friend Alexei that I've met just last week in Barcelona. So hello, Alexei. So he's asking you, Thomas, how does Switzerland venture capital ecosystem foster innovation and support the growth of startup compared to other European countries? What do we have in Switzerland that makes us special to foster innovation compared to, other European countries?
I would say what makes special is that, as we discussed, it's deep technology. We have an understanding, knowledge about the industry, about the real innovation. We have well-known founders here, entrepreneurs. As I said before, we need also to have not only to have high-quality startups. We need also high-quality investors with a background, an understanding of the business. So it's not it's smart. In the end, it's always smart money. So it's not only the money. You need also the knowledge, the expertise, and that we have also in Switzerland. We have a lot of business angel. It's growing the whole ecosystem. I think when I compare Switzerland to other European countries, then I think we showed a little bit also more. We were or behaved a little bit more resilient in the past because of our focus on deep technology and not on the mass market. So in the end, it's always the technology. It's the expertise of the team, the startup founders, it's the investors. And you know how this is in our business. You need in the value chain or in the feed chain, you need everything. You cannot say we need only more early stage investments. We need also the follow-on investments. Alec said before, when you start a business, then it's a seed, then to Series A, Series B, and then maybe an exit, and all comes together and creates an ecosystem. And I think Switzerland is on a right path. It's not we have more potential, but it's a good time to invest because there are a lot of startups and valuations tend to be lower than in the US, in Asia, and we have a good governance. You know, Switzerland is famous for that you have safety, you have a good quality of life you can have here, etc. So this helps that. And give comfort also to investors to invest into Swiss startups.
And I would also add, do you have, I would say, as you said, the ecosystem is starting to filter itself in a way. We have more and more incubators, more and more accelerators that give lights to the good, let's say, ideas or the best startups. So it's easy to basically, at least from my side, we know which good startup is going to pop outside because the word on the street is getting very fast. It's a small country. And compared to, if you were in Seattle versus New York versus Silicon Valley, to get visible, you need to do a lot of PR. So that's why you see this whole magma of companies trying to go inside their marketing and do TechCrunch. And they spend like a startup founder or founding team is almost spending 50% of their time on roadshows and personal PR to exist because it's so big and so crowded. In Switzerland, what I feel is you need to have a 10 times better product. You need to take the time to build a better product, and you can because the structure of the country enables you to focus on quality and creating that added value. And I think that makes it also standing out from some other places. So you have the right environment for that, yeah.
And we have also a high diversification when it comes to sectors, subsectors, verticals. So we have not only one sector who is dominating. In some countries in Europe, you have ICT or verticals who is dominating the scene. So we have in Switzerland more and more also. We have life sciences companies. We have clean energy companies. We have micro, nano, robotics. We have ICT, PropTech, legal tech, etc. So it's very diversified, and this is also a good sign of that we are growing not only in size, we are growing in maturity. But as we said before, it's still a lot to do, but it's a good time, I think, to invest into Swiss startups.
Yeah, and what was also striking my eyes, right, is here when you look at the type of size of funds, right? This diversity and this maturity is also showcasing that a lot of those funds that were 50 million, 80 million, 100 million a few years ago are maturing, vintaging into now bigger funds and structuring even later stages, which gives you this better domino effect. And also this ecosystem that you guys also help us create means that we know who to talk to if we need to lead a bigger round. So that's also create a better ecosystem, connection. And they know also, for example, I had a conversation at this pharma conference last week with a corporate VC in Jordania. And Jordan, they was telling us, we focus on Series B. And we never find good digital health early stage from seed stage. And we are basically more agile, smaller, nimble. And this is how we can basically support better corporate VCs that are headquartered in Switzerland, actually, for most of them. And this is, I think, where the beauty of the country is that we have a lot of venues and forums to actually have the conversation. We don't have even to search for it. It's just naturally we get connected from Basel to Zurich to Geneva or Lugano, right? So it's this despite 3 languages, right, and despite having very much different industries, the ecosystem is quite healthy, I have to say. Everyone starts to know their place pretty easily, and from a quality of startups, I have to say, more and more the mindset is not just to build a beautiful product that stays in the lab. A lot more now we have also maturity when it comes to commercial operations, which was a bit of the disease of, if you were asking me the question, to be honest with you, right? 10 years ago, I would have said, yeah, the European market overall, and Switzerland a little bit included, would be an engineering kind of market. Like we love to build stuff and we will find someone else to sell it in a way. But lately, I have to say, the discussion we see with startup funders is, I have a roadmap, and we need to ship the product as fast as we can to have a good valuation model. So the maturity also in the conversation between VCs and startups has matured to compete beyond Switzerland, right? And this is where I think we are going to see much more interesting startups scaling out of the oven in the next future, because the quality of the commercial model is also better.
Sure, yeah, no, I can totally agree with you. You can see here in the chart that's the fund sizes of VCs based in Switzerland. So we have here over 100 respondents, and you can say that we have 70% say we have funds below 100 million. But on the other side, you can also say we have around a third of managers with fund sizes above 100 million, and then we have a fifth above 250 million. So it's quite sizable amounts what we have in Switzerland, and it's growing. We can say also we are seeing more. Also on the left-hand side, we're seeing more fund sizes below 50 million, but this has to do that we have a lot of emerging managers who starting their funds, and so they starting typically with a fund size between 20 to 30 million, and for the first generation, and then they can, if they are successful, they can raise the second, the third fund, coming to 50, 60, 80 million. So, and I think that's an encouraging trend what we are seeing. And if you compare these numbers to European numbers, then we have in Switzerland one of the highest penetration when it comes to funds over 100 million. When you compare that the population size of Switzerland compared to Germany, etc., we are well ahead Germany in this ranking. So it's also a good sign that. And at the moment, the smaller funds, they tend to invest more in Switzerland. So they have a specialized focus in technology areas and on Swiss startup companies. And the larger funds, they tend to invest more globally in the end. So the larger ones, they invest maybe 15-20% of their money into Swiss startups, and the rest is then allocated globally. But the smaller ones, they are investing sometimes exclusively into Swiss startup companies.
And a question for you, Thomas. It's related to the size and especially emerging managers. Usually, do you see a difference between cantons, right? Because we speak about Switzerland as a whole, but we're also a very diverse country where from Geneva to Zurich and Lugano, you might see differences, right? Do you see from a pure VC perspective a different color? Do you see more fintech VCs in Zurich, more life or digital health VCs in Basel? You see where I'm going with this?
Yeah.
Oh.
Yeah, at the moment, what we are seeing is quite a lot of digitalization focuses. Clean energy is also a focus. And I think the life sciences, these areas who are more capital intensive, like biotech, medtech, so the hurdles are much higher. So then you need to raise 150 million with a first-time fund, and that's very, very difficult. So you need then a cornerstone investor, etc. So, but what we are seeing at the moment is a lot of in ICT, fintech companies or funds with a fintech focus, or micro nano, the robotics. It's the whole Zurich area with the close to the ETH. And both universities, they every year they are bringing around 30 to 40 spin-offs to the market. So it's quite a very healthy deal flow, and around Zurich, around Lausanne, we are seeing also new emerging managers. It's a little bit more difficult, as I said before, for life sciences biotech startups because it's more capital intensive, but we have the established ones still, and still some are in the making. And so it's also when it's also very diversified.
And also that we see in digital health more and more pressure to have more capex into that, because they need to have more and more clinical evidence. The regulation is also stronger for medical devices, class 2B, class 2A, and so we see a lot of demand from startups in terms of raising the seed round from a digital health perspective, which is interesting because they copy a little bit the biotech system in a smaller way, right? It's digitalizing, but also mimicking the natural way of those corporate VCs to actually enter the game, because those corporate VCs also have shifted their targets towards their digitalization of the portfolio, which means that they are going to react in a certain way. That's at least what I can tell for some conversation I have with corporate VCs looking for digital health startups. Just a question on this. I wanted to have your take, because sometimes we receive questions, in terms of the nature of people investing, and I found this slide very interesting, because we receive those slides, but we never have really time to dive into them. And here, what is interesting also in Switzerland is the nature of family offices. They are not just buying real estate; they are also active in the private market, including venture capital, right? So can you talk to us about the nature of family offices and their place? Do they usually have a different way to operate in the early stage phase, or do they have similarities with classical venture capital funds, funds manager?
Yeah, that's a good question. So you can see that they are playing a very important role here. Family office, private individuals, wealthy entrepreneurs. They are investing, or they are one of the cornerstone investors in funds. So they tend to invest either into startups directly, or if they can and have the resources, have the knowledge, or they invest together or in a fund. So I think they have less hurdles than the institutional ones. So that's sometimes better, sometimes not so good. It depends. And I think they can act fastly and or react and so it's for an ecosystem like Switzerland. It's good that we have such investors, because as long as you are an emerging ecosystem, you do not have the 50-60 year track record as in the US. And so, but you probably would miss a lot of the opportunities if you are not investing now, because you know how it is with mature markets. The returns are coming down, so you need to it's probably a good sign that the family office close to the businesses, they know how to handle small small companies, etc. So they are familiar with the funds, or they know them, or the companies behind. So often, you know, they have to build a portfolio. You cannot invest only in one single company as investor. So probably it's better also for them to not invest too much directly. So it's better to go with a fund. There are a lot of also managing aspects. You need to have capital reserves. You need to do follow-on financings. You have monitoring stuff, etc. So it's also for them a good thing, or to invest into a fund and to do not have the work. Otherwise, you have to when you are investing directly. So that's a sign. Family offices, private individuals. We have not so much the pension funds. But they cannot invest directly into a company. So probably they had, or would be better if they invest more into funds. But at the moment, you know, the fund sizes we saw before, 30 to 50 million as an emerging fund manager, it's too small for them. So often they are going for a 10, 15, 20 million ticket, and they cannot own 50% of a fund. That's not possible for them. So they are, and sometimes they are they act very slowly. They would like to have a track record. So probably it's better for them to invest into a third, fourth generation fund. And all the others, you know, corporate investors is also important. Sometimes they're investing in a fund because they would like to have or to see the deal flow of a fund. So that's we have some examples here in Switzerland. Emerald Technology Ventures, they have, or TX Ventures. So they have corporates as investors. So they would like to gain, or represented on the advisory board, would like to gain insights. Then the others, fund of funds, so they play a less important role. So I guess they also all are looking for more track record. They would like to have the 4th, 5th generation. But I think if you wait so long, then probably you miss a lot of opportunities as an investor.
This is a good point, because when I personally started right in this industry, what I understood, it was a trust business. Because if you go to a family office with zero track record, just like having played an operator role a couple of times, in a big deal, which was my case, and I was like, kind of, they were telling me, yeah, come back when you had 15 million invested and you started to have like something. So they were giving me that type of interesting, I like the idea, come back in a year type of thing. And what I understood is that when you try to raise purely from scratch, a pure 50 million fund, they just don't want to, it's what the swimming pool effect, right? The first one to jump is the first one taking the risk. And this is where sometimes having that, what actually helped us, I speak for me, is sometimes they just don't have the knowledge, the industry knowledge to operate a deal. Like you can start working from an advisory perspective on a deal by deal, and that creates trust because they see the way you work, they see the way you engage, they see the qualities you bring to the table, and you can become an operator of an SPV, for example, for them because they have maybe two or three other investors that they wanted to build a portfolio with. They still want to directly invest in a way, but they want to keep you at the table close so that they test you, and that is at least for me a journey towards building a track record because it's also people based, right? It's not just purely numbers, and I tend to see also an interesting trend. In Switzerland, the risk aversity and the risk management is not necessarily linked to the size of a deal flow. Where in the US, where I was participating in some LPs discussions,
Mm.
most of the discussion was how many startups do you have, right? And they were looking at pure numbers like IRRs on one side and the risk management linked to the volume density of the startup. And in Switzerland, I found that it's a more qualitative approach, like understanding the how you will be able to handle the deal flow from a quality perspective and from making sure the vintage of the fund is going to look decent for them. So that's at least for my 2 cents. This is what I experienced. I don't know if you can relate to that from your expertise, but yeah, very different.
Yeah, we are seeing also similar business models or developments among VCs, GPs here in Switzerland. So they started, as you mentioned, with VC as a service, you can call that. And then to build a track record, to build the trust you need, and then they started their own fund. But it's high hurdles to do that, and you need also, you mentioned it before, you need a license, you need marketing power, etc. So at the moment, around 35 to 40% is of the VC money invested in Switzerland is coming through a fund. All others is invested through directly through family office. So family office and private individuals or wealthy individuals, they not only play an important role when it comes to as an LP, they also play an important role as a direct investor. So that's not or the business angels. So they can also open the doors for startups and
That's true.
in the end. And so it's both. And then we have also, as we mentioned before, the corporates. At the moment, they're investing around 10 to 15% of the overall volume in Switzerland. So it's a little bit behind what we are seeing in Europe. It's around 20-25%. In the US, it's 25 to 35%. So we are a little bit behind when it comes to corporate venture capital. But we are a lot seeing encouraging signs when it comes to small and medium-sized companies, that they are starting to think about if they should how to do it, if they should work together with a VC, if they should do it alone, if they should build their own expertise resources. So there is something ongoing, and I think this will also contribute then that not only corporates are acquirers, they probably will be then also more and more investors in the future.
And they become also customers in a way, right? Those corporates can also be distributors. They can be customers of the same venture. So moving on, because we are arriving to the end of this conversation. What are your views for the future, right? What can we expect from that ecosystem moving forward? Because it seems on one side that the US is not slowing down, right? There is an appetite for growth there. The Asian market, the same. We see the Singapore markets, even the authorities calling for startups. And surprisingly, in the European startup nation, including Switzerland, things are not so bad, right? What can we expect for the next 2, 3, 5 years if I am a startup founder or a venture capital manager looking to establish myself in Switzerland?
Yeah, it's. I would say it's. We are seeing encouraging signs here in Switzerland. But as we talked about before, that's a challenge and an opportunity that we have to think globally. We have a small domestic market, so we have a good initial access to capital in Switzerland. But in the end, growth requires also international partners. So you have, if you are growing, then you have also to look about not only the domestic investors, you then probably have to have also the foreign investors. But I would think it's good. We are seeing more and more also from the domestic investors who can give you access to a source of capital to that you can build and then you can grow over time and to invest, and then you can also next financing round probably they will be an international investor who joining the syndicate. So but you need I would think for a startup it's important that they do not go too fast and only take the best valuation. So they should also focus on you mentioned Alec before, focus on the soft factors, on management, on or the investors, how they can how you can benefit from them. So it's not only capital or valuation dilution. It should be the end, and that you can on one side realize your vision, your ambition, but on the other side to be focused also on the soft factors, quality. That's I think, and that's in Switzerland or in Europe we have a lot of this. We have, as we mentioned before, we are not focusing on the pure numbers. Also, the soft factors plays an important role, and I think this is good that and this helps that the ecosystem will develop more stable. Maybe we will not see the explosion what we saw 2-3 years ago in the US, but we see a stable increase of fund sizes, stable increase of investments, and I think it's a good ground that you can establish your business here.
I can also see the trends growing from a talent perspective. I see more and more people interested to go to the VC side, right? So the venture capital side, because they want to play a part in the ecosystem, not just from an accelerator, advisory, incubation, but also from a VC perspective. So a younger generation is hungry for playing a role there. I think that's also a good sign to see people thinking at building a small, even if a small fund, right? But this is a generation of maybe a first time startup funders that exited. I have one of my friend. He created a startup like that, and now he's after selling his startup to a US company. In this case, he was in Berlin. Now he thinks of building his own syndicate, right? So you have, and he's young. He's less than 30 years old, and he's looking at jumping. Not into a second startup, but really, really structuring, some of the friends and families he has around him and building a syndicate to support him. So I think that's encouraging. And I think also the world is becoming also more regulated and the governance is important. I think more and more I can see that having a good product is not enough. We were talking about the soft skills. I think some of the VCs I talk to, at least we are agreeing that a good governance of the company is reinsuring also limited partners. Like when your company knows how to communicate, on quarterly business reviews, when a company knows when to hire an advisor, not dilute, their equity, and that gives also that maturity on handling your governance as a company is also part of the maturity of the ecosystem because it creates less admin works from a VC perspective, which for some like Lorenzo in the call can tell you, we surprisingly got from a pure VC perspective, but dragged down to much more governance conversation, right? To really guide the cash burn of the company, not just in a where to invest, where to play, where to win from a strategic perspective long term, but really how do you take decisions? How do you structure your decision making framework? And I
Mhm.
think that is something that also the Swiss market is getting a little bit ahead of the curve than some markets where we just spread and like it's a burning tree strategy. Like let's try and something will pop up and we'll consolidate later, like a private equity mindset. I think in Switzerland we are not trying to burn trees and see what happens. We are trying to really get a solid governance model to grow potential market leader. I think that makes it also a solid future for the ecosystem.
Absolutely. And yeah, as an investor, I can tell you, as an investor, it's I think, or in an early stage phase, you do not have the high competition from foreign investors. So the competition for good deals is less intense and the price is better. And I think this will then provide a positive return, or a better return. And I think it's also, as an investor, it's also, or it's important also for the startups, that the company building aspect is very important. So bringing crucial expertise to the table, and this will also help that there is higher barrier of entries for imitators. So it's and this all together provides better returns.
Yeah, perfect. Thomas, thank you so much for being part of us today and answering some of the questions we had and being part of that ecosystem overall. You've been a great help, not just for me, but for many. So I think from all of us, thank you for the hard work you guys do at Seca. And yeah, pleasure to listen to you and your leadership at HBM. I think from your perspective, I think it's an exciting journey the Swiss ecosystem is embarking so far. And yeah, so happy to count you more often among us in the future.
No, it was a pleasure. Thanks a lot, and a lot of success. And I'm always fascinated what all other guys are doing in our ecosystem. And I always saying, if we join forces, then we can capture the huge potential we have here. And there will be more and more role models, exits, new funds, new startups. A lot of opportunities ongoing. Don't miss it.
Yeah.
Thanks a lot.
No, thanks. It's exciting. Thank you guys for following us. For the people who are looking at next week, so we do keep this open door to all of you. So startup founders, ecosystem partners, incubators, LPs. So we're going to invite some of you on stage also to share your journey. If you have any question, you can ask us on our WhatsApp channels or emails, so or on the comment section, and to be continued to the next episode. Thank you, Thomas, again, and see you
Thank
guys
you.
very soon.
Bye
Bye
bye.
bye.
Thank you.